Gautam Trivedi, Managing Director and Head of Equities India with Religare Capital Markets, joins us live from his Mumbai office. Gautam, good morning. Thank you for joining us. Gautam, we've come a long way from the recent low. Banks have stabilized, IT stocks have recovered, select pharma stocks are hitting at a new all-time high. Do you think the worst of the price action is behind us?
No, I don't think so. I think there are two ways to view the current rally. Of course, a lot of the rally was hinging upon whether the Fed would taper or not taper. And, we know for a fact that now that's not happening. Having said that, even last week, you've not seen any incremental major flows. I think a net of $100 million has come into the market all of last week. Hopefully that accelerates because the tapering is not happening. But I think on the fundamental situation in the country, on the ground, clearly things are still not improving. So I think with all of the enthusiasm that we've seen from a bunch of analysts and strategists about the market, I think we are basically still very, very cautious about the market. Fund flows aside, holding that aside for a minute.
Gautam, what is the future of PSU banks? Because everyone is of the view that in the short term, PSU banks could just go one way, which is down. Do you think there's too much of bearishness on markets pricing in a very dire kind of a scenario?
I think the market is, for that matter. I do not see really any reason to buy PSU banks, or for that matter, for the most part, banking stocks at this point. I think there is definitely more weakness to come. The RBI governor did in his initial speech hint at a potential change in the way banks are recognizing NPLs, and if he gets that to be a lot stricter than what it is today, you'll obviously see numbers going forward getting uglier. So I think with the interest rate cycle actually turning around upward versus actually softening, I would be very cautious about putting fresh money to work in banks, whether they're PSUs or privates for that matter.
Gautam, so what's the sense? Do you think the market will continue to be range bound with 5,200 at the bottom and near about 6,100, and we'll have to deal with volatility all of next month as well, because it's going to be a crucial one with earnings?
Yes, I think so. I think the market is going to be range bound. Of course, let's not forget the effect of the non-tapering, which is we haven't seen that impact yet. We haven't still seen any significant amounts of money coming in. Hopefully that does start to resume, and of course, if that comes in a big way, then of course a lot of what I've said may not necessarily play out. But the fact of the matter is, at this point, I think market and investors in general are extremely cautious about the state of the Indian economy. And I think while the rupee may have stabilized, and which is obviously a positive, and I think outside of that, the underlying economy still remains extremely fragile.
Gautam, whereas we tend to talk about our currency, our economic scenario, India's GDP growth, do you think the big cue is global, it is not local in nature? Whatever is happening to other emerging markets or other developed markets will have an impact on India, because the way we moved in the month of August and September had nothing to do with India. It was very global specific.
Yes, absolutely. Like I said, I think the impact of tapering has still not come in, we haven't felt it as yet in India, or for that matter in most emerging markets. And even if you look at year to date, DMs have outperformed DMs. I mean, you've seen some of the performances of the S&P, for example, is up 18.5%. The CAC is up 17%. The DAX is up 16.5%. And, of course, we all know the Japanese market has been on fire. It's up 24% in dollar terms. These are all dollar term returns year to date. So when you compare these to how EMs have performed year to date, the DMs have obviously done extremely well. Question is, with the tapering having been called off, will the fund flows now start to come back into EMs, and obviously that will impact India. A lot of people believe that will happen, and I think we don't know the quantum, but the fact is, more often than not, we've seen, at least in the past 6 to 12 months, where you've got India-specific fund managers or fund managers managing India money, very clearly not very positive on the market. The emerging market fund managers have been actually fairly positive on India vis-a-vis other emerging markets. So I think India will end up benefiting from a return to emerging markets if that were to happen, yes.
Should we not discount the importance of US debt ceiling, because 2 quarters ago when the debt ceiling surfaced up, emerging markets benefited. As of now, the consensus view is that developed markets will do well, emerging markets may not do well, but now because of the US debt ceiling, do you think the reverse could happen?
Yes, I believe that could potentially happen. And, it obviously has an impact on a lot of things, including not just the currency, but more importantly, the ability of Indian companies to raise equity and or debt. And, if you see a return of that, you could see to some extent, a self-fulfilling prophecy where fund flows will help, I think, hopefully clean up some of the balance sheets of Indian companies.
What are the key risks then, Gautam, right now for the markets? What could completely spoil the party and we see levels of lower than 5,200 and the currency back to appreciation mode?
I think a couple of things. One is, as we discussed on the overseas foreign fund flow, if that does not pick up, that will continue to haunt the market and will be a major problem. Secondly, I think a potential hike of interest rates again by the RBI, let's say in December, I think will obviously be looked at more negatively than positively. So I think these will be two major factors that the market's now looking forward to.
Okay, let's revisit our previous conversation. You were bullish on mid-cap cement stocks, you were bullish on mid-cap consumer names, and from the mid-cap consumer name, you pointed out you are bullish on Bata. Do you still like Bata? Do you still like mid-cap cement names?
See, the way we're positioning ourselves, given the hike in the repo rate by the governor, and I think it's now people are starting to understand the governor better than, he's only been on the seat for less than a month. But let's try and understand the governor's direction and the way he seems to be approaching monetary policy. I think he seems to be clearly in a mood to be tough on banks, to be combating inflation. If you read the text of his statement, the word inflation has been mentioned 15 times, 15. So if you look at the way he's going after combating inflation, I think that just has reset and rather changed a lot of the opinions people had, whether it's analysts, strategists, economists, on what they thought of the governor or the direction the governor would actually take. So I think that unfortunately has made a lot of people change their views dramatically. And at this point, I'd be fairly cautious on the overall market. Having said that, we are recommending a defensive portfolio, which does include some of the mid-cap consumers, and a portfolio which is dependent to some extent on the rural theme, because the one positive or the silver lining that we've had this year has been the good monsoon.
What about cap goods and metals? Are they as well part of the positive list, or do you think these are just trading rallies that we've been seeing off late?
I think these are trading rallies. I would not at this point get excited about either one of them.
Gautam, whereas the general opinion on pharma is bullish, but the pharma space is clearly divided. One end of the spectrum, you've got Wockhardt, Ranbaxy. On the other end of the spectrum, you've got Dr. Reddy, you've got Sun Pharma. So what are you advising your clients? Are they better off buying quality companies at an expensive price, or now it's time to go down the ladder?
I don't think as yet it's time to go down the ladder. It's time to still remain conservative and stick with the big boys. There will be trading opportunities or opportunities where you're seeing stocks correcting for one reason or another, whether it's an FDA issue or some other issue. And I think that's the time to actually closely monitor those stocks which are falling or getting hurt, and figure out when's the right time to buy them. But otherwise, we'd stay largely focused on the large caps.
Let's talk about banks. And when the economic outlook is not bullish, banks are going through natural compression. But even though most of the banks have gone through natural compression, Kotak Mahindra Bank and HDFC Bank, which are expensive banks, they're still holding on.
I think they will continue to hold on. I think people are careful about where they're putting their money to work. Financials, fortunately, it's been a very difficult year for financials. And I think with the hike in rates and potential more hikes to come, banks would be the wrong place to actually be. And within that space, I think both these banks that you mentioned remained pretty rock steady. And I think, if you do still want exposure, HDFC Bank is still very much our preferred pick within the financial space.
What about IT? Do you think it's time now to look at mid-caps because the frontliners may have already sort of reached rich valuations?
I don't think so, because a lot of the IT companies within the mid-cap space are just not able to scale up, unfortunately. So what we are seeing is even the mid-caps are just not invited to a lot of the RFPs, which the large caps are. So, the mid-caps could potentially be interesting from an M&A angle going forward, but for the time being, I think our preference remains with the large cap ITs, including Tech Mahindra, Infosys and TCS, which are basically our top picks.
What's your expectation then from Minfi? Because soon we would be watching out for the earnings.
I think the expectation really is the transformation that's taking place in Infi. And while we don't have a clear handle on that, but I think you'll hopefully see some announcements coming through at the time of the quarterly results, because as you've seen a series of departures, and obviously these are not natural departures necessarily. They seem to be part of an ongoing restructuring that seems to be underway with Narayan Murthy taking charge and having a team led by Rohan. So I think it's an interesting stock to watch to see the steps that the new management seems to be taking to change and make some significant changes, not just to personnel, but also the way they approach the business. So I think a lot of people, a lot of investors are focused on this stock and want to see how this plays out over the next 6 to 12 months.
Gautam, so give me a high risk, high return idea where the present is slightly shaky, but you're confident that future will be stable.
High risk, high return idea.
That's right.
I'm talking about defensives and you want high risk, high return.
Well, every brokerage has some out of the box ideas.
Fair enough. Well, I think high risk and high return. Well, the one stock that we still like and which has traditionally done extremely well in the post-monsoon and post-good monsoon scenario has been Mahindra and Mahindra. Again, it's not necessarily high risk, but that's a stock that particularly stands out because it's got a couple of things going for it. What we did was we did an analysis of the top of the last 10 years and found that in years when the monsoon was good, we realized that Mahindra and Mahindra gave an average return of 20% between September through December. Now, this year in particular, you'll see 5 state elections, and then you've got the general elections probably in June next year. So given that situation, I think, in spite of the fact that everyone and their mother is launching SUVs, a lot of those SUVs actually are more urban focused, whether it's a Ford EcoSport or the Renault Duster. But the fact is, you can't take away that that Mahindra and Mahindra holds pretty much a leadership role among the rural SUV market, and the Scorpios and Boleros will continue to do well. So we recommend Mahindra and Mahindra as a stock to buy.
Ronnie, not looked at EcoSport and Duster. I mean, they are giving a tough fight to Mahindra and Mahindra.
I agree. But like I said, I think that's very much a urban phenomenon. And when it comes to rural India, which is where not only have you had a good monsoon, but you've got 5 state elections and the general elections coming up, you will see a significant increase in the sales of Mahindra's SUVs and tractors, of course.
Okay, Gautam, let you go on that note. Really appreciate you taking the time out and speaking with us today. Good to have you on the show as always.